Okay, 4th of June, this is markets report, preview or review, and let's get straight to the charts. So, as it was before, and even more so, the BTC is the only interesting asset in this market. And actually it's on the move now. So you could ideally buy it here. I missed this one, but there was this small semblance of a pause pivot here, which I entertained. Also, there was this a bit premature buy point here, and right now we should also mention this one little turning point, which eventually led to the breakout from this downtrend line. And right now we're seeing that it is trying to complete this, maybe this low cheat area, maybe something like this. So ideally it will spend some time here, maybe consolidate a couple more, 1 or 2 inside days here would be ideal, but it also could go a bit down from here, maybe retest this ascending 20-day EMA. And the end goal, of course, is to complete this larger consolidation and start break out to the upside from it and start this potential rapid price appreciation period that I was sort of expecting for a while. And with this, in my personal opinion, it's the most interesting asset in this market right now, and it probably will be like this for some time, because with the exception of other cryptos where you could expect similar things, similar behaviors to the ones which were described in the BTC chart, with the exception of cryptos, there is not much to do in this market. And with this, let's see why I'm thinking so. Well, first of all, the indices QQQ did shake out below the previous highs, and now it's back above inside day today, or maybe not. Very similar picture in SPY. DIA is quite weak, actually. This looks quite bearish to me, especially if it will be rejected here from this congestion of downtrending moving averages. MDY is weaker, obviously, and so is IWM. And why? Because it is still a very index-driven market. The indexes, and most importantly the QQQs, where NVIDIA and a bunch of similar names are prevalent, is withdrawing all the liquidity from the rest of the market. One interesting thing is this recent quite abrupt failure in natural gas and in the oils. I don't know the team behind it, but from what I see now, the good thing is that it's not going to, it's not growing, and it's good because it doesn't signal more inflation ahead. But at the same time, this rapid decline could signal maybe a recession. So we'll see. We'll investigate that. What's interesting, GLD is quite weak too. And as I've said, these pivots which provide good risk-reward opportunity. They are quite rare, and most often than not, they do not work. For example, like this one. A couple of weeks later, the price is at the same level. So this is the distinctive character of commodities. And of course, you need a proper vehicle to entertain these. And I think that the most proper vehicle to trade commodities is futures. Yields are weak too. And as if this market was not hard enough to decipher. Very multi-directional market, I should say. You don't get a clear understanding of what is happening from looking at the indices. And of course, volatility is doesn't provide the answer too. So it could get rejected here, but there is also a good chance that it will play something like this. And I will show you some stocks as well, just to confirm the overall understanding. Really not much to do. And I should also mention that the ones I'm showing to you are the most strong ones. So you could understand that, you should understand that they are not representative of the market. These ones are holding, but there are lots of others which do not, and actually are getting worse. So how it works? Every once in a while, actually quite regularly, I screen the market, and what I see a bunch of setups, which means charts with good relative strength, reasonable entry points, and all of these tend to at least stall at the breakout level. This is a good example, actually quite good. A bit of the upside and back to the initial level. This one I was looking into looks quite weak. What else? DHT, all the same. Retests at best, and at worst something like this. No, basically no liquidity in this market. No liquidity at all. And let's take a look at the stock. Still holding well. Yep, there it is. This is where all the dollars are. But my own perception that there is a good chance that not most, but significant part of these dollars are not smart money. And will it hold? It could. But in this market, which is built around a single stock, it's not a very safe environment to commit a lot of capital to it. So that's why the cryptomonedas. And by the way, in the crypto market, in the native crypto market, unfortunately, Interactive Brokers does not provide direct quote-unquote access to cryptos for people residing outside of the States. But in cryptos, you are in a better position to manage your risk because of these reversals. Some are happening with gap downs, and you cannot hedge against these. Even if you trade with really tight stops, this is not an insurance against the gap down during the pre-market or after hours. I'm not even mentioning the earnings. It's a whole different situation and should be approached differently. So that's why stocks, for me personally, are largely almost 100% no-go zone. But as you can see, the IBIT and his sympathy trades like coin are holding quite well. And let's take a look at the IBIT, of course. The IBIT is holding well. It's starting to get a bit messy. So, but somewhere here, just to take a clearer look, somewhere here, it could be buyable again. And if it will provide a good buying point, it could be a very good opportunity to go overweight. But personally, I'm not going to do this in stocks. I'm willing to execute it in the native crypto environment because of the gaps. Anything could happen, maybe some unexpected regulation or basically anything, and you can find out yourself with a huge gap. Of course, it's under control of huge institutions and becoming more and more so, but if you can trade without gaps, you should go in this direction, obviously. Also, a few thoughts about the fate of Bitcoin overall, because I think that, yes, at least they allow us to see the charts, which is nice. This is one of your recent buy points, if you wish, or maybe a bit lower here as a pullback buy. I think that right now it's becoming more and more of more and more institutional. So BlackRock and others are controlling more of this asset with each day. The inflows are going in, and it plays out like this. People are buying IBIT or maybe something else which is about to come next, and the result is as follows. People own the IBIT, not the BTC. And guess who is the owner of the BTC? Well, maybe nominal one, but factual nevertheless. BlackRock owns more and more of BTC and will be owning even more in the coming days, weeks, months, years, and so on. And because there is a good thing to keep in mind. There is, as it was said, an infinite amount of money in the Federal Reserve, and the BTC is finite by definition. So guess what's going to happen? Some time will pass, and significant or maybe even prevalent part of BTC is going to reside in custodial structures such as BlackRock and others. And when and if the time comes to do something similar to ban of owning gold, which was carried out in the States and other countries in the 20th century, this ETF could be dissolved, easily could be dissolved, and it will be, of course, refunded with dollars, not the BTC. And guess who has the BTC now? All of it, with even no nominal rights from the owners. You guessed it right, these institutional structures. So this is what is happening now, and from my point of view, this fate is inevitable basically for almost every crypto asset, maybe with the exception of like Monero. If they become big enough, there is going to be an ETF, and it's going to be widely celebrated by adopters of this asset, of this coin, and with a passage of some time, it's going to be sucked into these institutions, and maybe at some time the owners could be relieved of this ETF, get their dollars, and the crypto will be happily residing into these custodial vaults. And also you should understand that the more of this asset is owned by large and ultra large institutions, the more they will be able to directly assign the price to it, because it's quite easy to corner the market, which means accumulate lots of shares or tokens of an asset when you have an infinite amount of money and your asset has a finite supply. So that's my assessment of the fate of crypto assets at this moment. But this doesn't mean that you cannot or should not participate, because rising demand will inevitably cause the price of these assets to rise. And of course, if we believe in this idea that this is sort of correlated with the policy of the states as a country and the states overall around the globe, this is basically an incentive, and the more money will be printed, the more of this money will find its way into these ETFs, and the price of the underlying asset will go up. So basically, I think it's okay to conclude our communication for today. Stay tuned.